Jaryd's commercial property breakdown, the ups and the downs, the psychological journey he's gone on is what we're going to be discussing today. Hi, I'm Sam Powell, I'm co-host of Property Pals Australia.
And I'm Jaryd Krause, and yes, thanks for listening and tuning into this one today, guys. I Sam asked me a bunch of questions on this property that I am about 79, 85% purchased. We're going, everything's done. We're just waiting for settlement, basically. And yeah, I sort of show my emotional cards in this one around pulling out of a deal, how it worked in my favor, being a little bit emotional. We talk about all the start of the journey for when I first signed up with the buyer's agent Polisi Property to acquire this one, and to now going into settlement. What has happened in between, the deals I looked at, the deals I missed out on, and yeah, Sam's got some good questions on like what would I, what did I learn in hindsight and around LVRs and types of commercial properties. Yeah, you had some amazing questions, Sam.
Yeah, what would you do differently? It's always good to break down the process and help obviously share your journey as well. So there's definitely a lot in it, and no doubt you'll have a few questions at the end of it if you are listening to this. So enjoy, and we're here to support you every step of the way. We'll also put a code down to if you are interested in commercial property, as always, for Polisi's book on commercial property, and that can really help your journey as well.
Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jaryd, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional.
And we're back, another episode, and this is going to be it was a follow-on from commercial property and Jaryd's journey, and we've got another deal to talk about, don't we, mate?
We do. Commercial is interesting. You never know what's going to happen, and things can change at the drop of a hat. But this one looks like it's going to go through completely. And yeah, I guess we'll talk about the whole.
What makes it look like it? Like, how have you? Because we haven't. All the listeners, Jaryd just brought this up, and we just thought we'd hit record as we usually do. And what makes you think it's looking like it might go through? Why is it not going through? Talk me through that.
No, it is going through. Basically, we've gotten yesterday. I signed the documents with it was actually quite cool on WhatsApp with ANZ lender. So it's ANZ business loan that I'm getting. And we did WhatsApp, and he witnessed me signing the documents. So I printed them off over here in Indonesia, signed them, and then I had DHL come and pick them up from my place and express post them back to this guy in Maroochydore. It was actually pretty cool. He's like, he works for ANZ, and half the week he works from home. He's just in a Quicksilver shirt, just chatting, and half the time he goes into the office. But yeah, it works in like business loans for commercial property deals. So yeah, it is going to go through. We've gotten the letter of offer has been put through for. We've gone unconditional with finance. We just need to get those documents to him, and then we're going to go into settlement, and then I'll put my money in the bank account for settlement, and it'll be mine.
Woo!
Yeah, all the trusts, I should say.
Yeah, nice. Oh, that's exciting. So, yeah. I mean, it's been a bit of a journey, hasn't it? Going back and forth. I thought it'd be, and this is pretty typical too. Like, a lot of people going, I want to be an investor. They find a property and they think, like, we all have preconceived ideas. It's just obviously being transparent with everyone, but it's, you don't always land the first that you go through, and there can be, the last commercial property update we went on your journey.
Yeah.
We were just discussing the fees, and you burnt a couple of grand in solicitor fees and building and pests and everything. And now
If you
you're
guys
here.
haven't listened to that, go back and listen to that pod.
How did you go with the building and pest on this one?
It's a good question, actually. So basically, how about I chat about, like, before we get to the building and pests, let's talk about when I first decided to buy a commercial property, and the length of time it's taken to get to here. I was in Australia just before I left Australia at the start of the year. In start of March, I started working with Polizzi Property to look to buy a deal. And so what is it now? It's time October. Of recording. It's end of October, basically November, and settlement's going to go through close to the end of November. So we've got that time frame. So what's that? It's like 9 months ish. I thought we'd find something within 3 months. They present a deal straight away, and a bunch of were looking good. And then my acquisition criteria changed. I wish I had have waited a little bit longer because I've got more money to spend. I bought a smaller deal than I expected, and I could have bought the deal size that I wanted. This is in hindsight, but that was from a couple of cool things happening business-wise that I didn't expect anyway. So if that cash didn't come in, I would have just stayed in the same price point. I think we looked at, like, I might have been presented like 10 deals, and I went really close on 2, missed out on 2, and one that I went all the way through due diligence, and that's where I lost that money in due diligence with this like Sunshine Coast retail property. And then this one is in the same state, Queensland, and it's a warehouse, and building and pest was interesting. So to come to that one, building and pest came in past, and there was a couple of things like some chip tiles in this warehouse, and the sink was not like, doesn't look like a brand new sink. It's just aged, and basically this warehouse is like as an automotive tenant in the auto space, and it was just a bit rough. It's just they haven't done a lot of maintenance in it, which is fine. And there was like sagging in the ceiling, and it was basically just gyp rock. And my solicitor formally asked for those things to be approved, or to be finalized and worked on, maintenance and repair, prior to settlement. And they came back saying, no, we're not going to do that. And I'm like, right, okay. So then I thought, stuff these guys. Like, they just wanted to sell as is, pretty much. And I think they just were at the wit's end with the property, or I don't know, they just might have needed cash real fast or something. And I was like, all right, well, let's just take that amount out of the offer, out of the price. And then they said no again. And I was just emotionally frustrated with them because I just didn't feel that was fair and right.
How much?
And I basically said to the buyer's agent, I was like, I'm not going to bother stuff them. Like, if they're going to be like this, I'll just take my $5 grand sunk costs in DD and leave. And then I thought to myself, hang on, cost of business, $5 grand sunk costs, is that going to be more than what it's going to cost to fix? Yes, likely. Should I just move ahead with it? Sure. We got a couple of quotes for what it costs to fix, and then their selling agent, this is very interesting, their selling agent decided to decrease their commission by a portion of what it would cost to pay for those things to make the deal go through, which is amazing. So ended up saying yes to that and moved ahead with the rest of due diligence and signing papers and all those things.
Yeah, it's that's just the environment that you're in, right? Like, I've been finding that too. Like, agents, especially in high demand areas, the negotiation can be quite difficult because, like, from a sales perspective, I guess that they've got their sunk cost as well with their legal teams, but generally that doesn't change much. If the deal falls over, there's a lot more loss from the buyer and the emotional buy-in at that stage, and then it's just going back and forth. Like, is it worth losing a deal over a couple of grand? And as you said, they know that, and the selling agent knows that, the buyer knows it, the seller knows it. Sorry, and it's just it's a tough one. Like, obviously, you want to have a win-win scenario, and I mean, obviously, the agent can reduce their commission. You never know either on the background. Like, do you know that the agent reduced the commission, or did the seller actually just go, stuff it, and the agent was lying to you the whole time? Or
that's a really good point. I basically just made it known that I was frustrated, and I was happy to just sort of expose my emotions on purpose, intentionally, so they know this guy's being emotional about it, he's just going to run away from the deal, and then everybody loses out. And that was my intention, is just be and I was frustrated as well, but my intention was just to showcase F you guys. If you're going to be dicks about it, I'm just done. I don't want to deal with these people. And so they kind of realize, okay, let's come to the table with this. And it was very last minute. And like you said, it could have been the seller agent lying. To be honest, the seller agent was very, very slow. We got presented this deal about 2 months ago, and it took ages for the offer to get approved. And then it took a long time to get the contract. It was a slow process, this one, a couple of months.
Yeah, I mean, everyone works at their own pace. It's different. You can the more you know, the more you start to get in your head too. Like, my head goes, "Oh, were they just dragging it out because they wanted a higher price and it didn't come through in time?" The other thing too, and that's the negotiation tactic, is just showing your emotion and looking like you're going to pull out. It was a smart play, because the agent, that's when the agent starts working for the buyer, essentially, is what I like to call it. Because you think about all the time and energy from, it's the same as the buyer's agent. They're that person that's done all the time and energy, and it's so close, and I've been there, and you're don't lose this thing for a couple of grand, because on the scheme of things, to go buy back in and to miss the capital growth, but explaining that to a buyer is challenging without sounding like you don't have their best interest at heart. But then the sales agent, it's the same thing, right? They've done all the time and energy. They don't want to lose it. That's the tactic where you try and get them on your team, essentially, to broker the deal through. Because I'm sort of the same as you. Is you're happy to pay a fair price for a good property, but it just comes to a stage where you're well, I'm buying this thing. I'm not asking a lot. I'm asking you to hand it over so it's suitable for rent as is. It's not it's the end of the world. Stop being dicks.
Yeah, stop being dicks, basically. But it is, in that price range where it's very hot, and in that area as well, it's quite hot, and they just sort of know that it could sell pretty quick.
Yeah. And if you look at if you are a seller, I'd be looking at that as a sales agent, going, well, look, limited supplies going on. We all know that, especially in that Queensland market. And this is the other thing with commercial, right? Is because it is a stronger cash flow play. People generally aren't in a rush to sort of let go of it unless it's a decent deal. There's always the opportunity cost. Like you said, the rush can come through on the back end where they want to take that money and go into something else. Maybe they were dragging their feet for a while because they didn't have anything to go into.
I do have a sense that the sellers are pretty lazy in terms of maintenance for the place, and also what's good about this deal, the value add, is that it's under tenanted. For example, it's under market price, the rental agreement, and it needs to be changed in about a year from now, and I will be able to achieve a better yield by renegotiating the lease for that type of property in that area. So I kind of like decided to take a little bit of a position, and this is based on what the buyer's agent was educating me on. Is like, look, it's not going to be crazy high yield right now. You're going to buy it at market price though, and because you buy it at market price and it's under tenanted or under yielded right now, you will put the value up in a year's time by securing a new lease, either with the same tenant or a new tenant, and they'll have to pay it because it's going to be market rate. So there's a bit of a value add there in it, which is also why I decided to move forwards with the deal, even though it was like a lesser price point than I was originally trying to go for.
Yeah, that's a really good point too. Like, I'm doing some explainer videos at the moment where talking about that sort of exact thing is like, have your parameters in place, like your maximum budget and the maximum amount of cash you're willing to put into this deal on a weekly basis. So like, go in with the lanes in place. Where you end up, you have no idea because you're buying established property, and I think you had the same sort of realization. There was one probably takeaway that I took from your journey, which initially. There is commercial property is a cash flow play. That's why most people get into it. The lending environment has changed dramatically with commercial over the last couple of years, where it was historically 70% loan to value ratio, and then they've increased them to 80%. I feel that increase to 80%. Yes, you can control a better asset, but it did affect cash flow and finances, which. What's your opinion? Would you still do the 80% target initially, or would you just go, look, 30%? You're going to get better cash flow, less issues with lenders. What's your thoughts?
Yeah, it's a really good question. It's kind of like the best you can do is 80% LVR, 20% deposit, and that's under pretty strict circumstances with your business and the bank. And I did do 80% with this deal. I have the option to chuck an extra 70 to 75 to 100K in, and it will decrease my interest rate. And I might actually do that. I didn't have the option to attach a loan facility, an offset facility at the 80% LVR. But if it changes to like 65% LVR, I can have an offset facility. I just need to put a little bit more money into the loan to pay it down to get it there. And I might choose that option because then it will decrease my repayments and it'll make the property yield far better. But I just chose to stick with 80% for now, and then work out what my opportunity cost is once we've settled, versus like where is that extra money best? Is it in a different market or in the home loan, or do I hold that and maybe purchase another deal a bit sooner than I may have expected towards a deposit? But I would suggest for me, I definitely learned that I got to my maximum borrowing capacity, and then it was hard for me to get, around that $1 million range I was looking at. It's very hard for a seller to accept 80% LVR when they can have somebody that's going to come and pay, 70 to 60%, 50% LVR. They're going to go with them every day because at the end of the day, the risk is a lot lesser for them because it's more likely they're going to get financed with that type of LVR versus somebody like myself at 80%. So that's where I was sort of like missing out on some of those deals because it's such a hot market for that type of property that I wanted at that price range. Moving forwards, I would like to purchase, I don't know what the price range will be for my next purchase. Maybe I'll wait a couple of years, sell down some properties, get a bunch of cash. Maybe I'll buy something around the 3 mil and have a 70% LVR, right? Yeah. Or a 4 mil, 25% LVR. I wouldn't go for 75%. I wouldn't go for a 20% deposit, 80% LVR again at any size of a deal, unless the competition was pretty easy and it was smarter for me to do so, and I was more likely to secure a deal that way. Obviously, the less money in, the better. But, well, not always, but for my case, for scalability, yes. and having a more aggressive approach, yes, but I don't think it's a good option for people to have that belief that like I can buy a property at 80% LVR with commercial in that price range, because you've got other competition out there that is just going to come in and purchase it straight from under you. I have people in business, they're like, I want to buy a business for like no money down and it's under 500K purchase. And I tell them like, you're never going to be able to purchase that because sellers are getting all cash for these deals and you're trying to use finance. It just doesn't work that way. So there's big pockets out there that just come in like, I'll just buy this property for like, they might have a 40% LVR in that price range.
Yeah, there's always going to be a disconnect between like perception and reality.
Yeah.
I think that's like the role of like, I guess, the broker, whether it's a finance broker, buyer's agent, sales agent, business broker. And that's the education. Like all the marketing materials out there telling you, it's to grab your attention.
It
like
is.
with commercial, like lease stock loans and everything like that, you don't even need to show your income to get the loan. But then, like over the years, like lease stock loans become harder and harder to realize to make work, right?
Yeah, just because it can be done doesn't mean it's easy to be done, and anybody can do it. It's like for very particular circumstances, and to get to those circumstances, it can cause some frustration and stress, I guess.
Yeah. So when's settlement?
Settlement's supposed to be the 13th of November.
Geez, nice and quick. Then you'll be a commercial property owner. And who's your tenant? Just an automotive?
Yeah, just an automotive company. Yeah.
Yeah. And got concrete tilt panel?
Yep. Concrete tilt panel with an office, roller door. I think there's 3 car parks. Yeah. Pretty basic.
Pretty standard.
Yeah, pretty standard.
But that's the other thing too. Like people, it's similar to, well, I think we talked about renovating in one of our potties, where like everyone goes in with like, I want to make $1 million or make a shit ton of cash. Like I feel like you should be going into each deal, wanting to learn a shit ton and make a profit, but I think that's like the beautiful thing with this purchase for yourself is like it didn't max out your borrowing capacity. You're financially strong to continue to grow. But I mean, how much have you learnt, mate, just by doing it?
Yeah, so much. And I think that's a really good thing is like you said, expectation versus reality. My expectations are very different versus the reality. And I think most investors are like that. Even in my space, I really see that most people come in with this level of expectation and then they kind of get involved and see the reality is like, oh, okay, it's not as what I expected. And I think a lot of people leave based on that, right? Like I could have been the guy that was like, it's not really what I wanted. It's not meeting my expectations. Let's try and do something else. But that would have been silly for me to do because then I've done all of this work to get to this point. Why not just like stay the course? Because I know that I'm going to learn from this experience and only do better next time. And that's going to compound. And it wasn't, I'm not going to make as much money as fast as I thought I would based on my expectation. But it has really helped me be more realistic and not have high expectations and understand conservatively what my property portfolio will look like in 5 years and 10 years and be more conservative about it. And if I end up doing a lot better financially, then it's a bonus and a win. But if I just stay the course of what I'm doing, then I kind of know where I'm going to be. And I think there's a lot of confidence in that. And when you have that feeling of confidence, you can use that in the rest of your life of like how stable or unstable you are with ultimate confidence versus like hype.
Yeah. Well, I mean, like from an investing point of view too, like the emotional effects of losing money is far greater than winning money, how you call it.
Yeah.
So I mean, everyone's different. You can take these high risks, and it can play out. But for me, it's always like, well, as long as you can fight another day essentially. And there's always going to be risks. If you're so risk averse, then you may as well just own nothing and be happy. And that's cool, like, because that's some people are most financially free. Like the guy that invented the Telegram app, he's this Russian guy, and he's worth billions, and he owns nothing. And he's like, well, that's just a distraction to what really matters in my life, and I don't need these things, which is commendable as well. But then my mind was also going to, like, you got to understand yourself, right, as an individual, and what your time, like, I'm working and growing the business here, and it's a day just goes, and then the week goes, and then the month goes. It's so fast, and then you add on the complexities of looking for another investment property, or investing the income you're generating from your business. Like there's a synergy between growing income, whether it's PAYG or businesses, and that's a whole learning curve in itself. And then once you got the money, it's like, well, now I've got to learn what to do with it, and then you can go down so many different rabbit holes. And like for me, it's like, property is just property. It's just an investment vehicle. The only reason why I'm talking about it is because I've been doing it for 15 years. So I understand it, studied it, got experience in it. And then the other side of things is, I was like, well, what kind of person, or choose what investment vehicle you want to use, essentially, and stick to it. Because like, unless it's something, like, if you understand it, people trade like crystals and things like that. There's money in that. There's the art trade, and there's all these meme stocks now, or meme coins with like crypto, that people they're just really focusing on, and they're making a hell of a lot of money. Well, some are.
They'll tell you how much they're making. They won't tell you how much they're losing.
Yeah. The world is getting full of trickery too. It's just sort of like a thought process been going too, because like with AI and stuff now, you can create videos and images, and like you can sell a story that doesn't exist very easily, and that's dangerous, right?
I mean, there's people that do it like as humans. They'll sell a story that doesn't exist, and it's inauthentic, and it's been happening for eons, right? But humans are pretty good lie detectors, and can kind of, our senses are pretty good based on who we can trust and who we cannot trust. Sometimes we get caught out, and it's a really good learning lesson, a really good learning experience. But yeah, property is just one investment class, and this, I would say it's less stressful than most other investment classes, because you don't have to monitor it a lot ongoing, like commodities and shares and a business and stuff like that. They're a lot more like sort of active. People might think that shares and stuff is pretty passive. If you're investing for long term, you don't really need to check it. Great, but if you're trading these things, and it's active and it's more stressful. But I think the stress with investing in property, it's a constrained amount of time that you can have like stress around it. For example, the only stressful times that I really had in investing this in one was like, am I burning another $5,000 or so in due diligence because they're not going to come to the table with an offer? Do I make that decision to move ahead or not? And then signing documents and getting finance and making sure that's doing that in the Indonesian country is not fun. I'll tell you that much. Having to just go to a printer, come back, set up things. And yesterday, the guy, he literally grabbed the documents, put them in this envelope, and the envelope didn't have my like Waybill number on it, or like where it was being posted to, because I asked them to print it out and put it on the thing. Anyway, he hadn't even printed it yet, so he just grabbed my documents, put them in the envelope, and sealed it up. And I was like, dude, how do I know that's going to go to the destination? Because you might forget about it. You might put it in the back with all these other envelopes, and you just don't know which one's which. You just sealed it up. He's like, no, I've got this under control. I was freaking out.
Oh, well, another question I had for your commercial journey is, you were presented a couple of different deals, right? Like,
Yeah.
after what you've learnt, do you have what are your thought process about the different types of commercial, like retail, industrial, office? Like, do you, with your education where it's at now, like where would your comfort level lie, and what are your thoughts on each of those?
Yeah. What I've saw, I did get presented some retail deals, and you can get a better yield with some retail deals than, say, like warehouses. And I didn't get presented offices, but I got presented retail and warehouses, and that's kind of like what I was like open to. And I realized that I don't really, the price point that I wanted to get into was like in the retail. It didn't really excite me. It was kind of like I was presented these deals, and I was just like, I just want to buy something. Like my money's sitting in this account burning up due to inflation. Like, let's just get some freaking debt and just buy it. Like, being so unemotional about it. Just need to get in the market, right? Which is a good attitude to have at times. But I went through with this first one, which is like a gift shop, tobacconist shop, and it failed because there was a fire attack, and they were going to have another fire attack on it. Bikies were attacking it because it's a tobacconist and competition. And then I got presented another retail one, which is a shop in Canberra, underneath like a residential tower, and it was like kind of like an IGA. There wasn't much else around it, and I just didn't feel like I understood it enough to want to. Yeah, I just thought, like, what if the tenant decides to like end, because it's just like a quickie mart or whatever you call it. Like, they could just end and just.
What's the Simpsons? What's his name? The
Abu.
Abu?
Is it Abu, or I don't know?
I think it's close. Abu, yeah, Quickie Mart.
Yeah, quickie mart. And I was just like, this, who else is going to like want to rent this out? It's a pretty big space. Would it be a gym? Or they've probably got a gym in the residential tower already. There wasn't much around it, so I just kind of just didn't feel like it was the right thing. And retail, high yields, but
let's go back a little bit there. What was the because they're preconceived ideas based on not a lot of background knowledge, right? Like you and people say to me, "Oh, I just feel like it's not the right option," and I'm like, "Well, based on the data and all the due diligence and research, I believe it is a good option." You know what I mean? So, like, did your buyer's agent, like, with that retail one, did they get down to that level of due diligence at that stage where they were like, doing the vacancy analysis?
No, we didn't do full due diligence, but they did mention that the lease is pretty strong, and it was a hot area based on data for that if you needed to re-tenant it. I can't remember exactly why I didn't go through with it, but you're right. Like, can be totally wrong. Like, saying it didn't feel right could just be because of my conditioning that I wanted a specific type of asset, and I could have maybe missed out on something that was great because I was mentally conditioned, or I allowed myself to condition myself into believing that one type of asset is the right one for me. And I could have been more open to it, but I wasn't at that time.
And I've been doing some reviews on some of my clients, and I just remember it every single time it's the same. It's just so stressful, and like, oh, is this the best one for our money? And then, like, there's no perfect property, so just explaining that is important. But then you start to see the results, and you're like, well, I hope you're happy that one of our clients we bought for $490. It's now like at the start in March, and now for a resi one, and it's we just appraised it for a refinance at $570. So
wow,
$80,000. That's I think it was over 15% growth in 9 months or 6.
Wow.
Yeah. So no, 7 to 8 months. And I was just like, this is the power of it. And I hope they can understand, like, it was a very nervous time for this particular client. And I was just like, there's a little bit of a push, but the push is with good intentions.
Yeah.
And now it's there. But on the flip side of that, like, even with I understand where people are at, both residential and commercial, like, because that push can come from, a place where you're like, look, just get it done, move on. Like, it's not great, it's all right, like, but it's not your money, champ. or you know what I mean? Like, so
yeah, absolutely. This is where you've got to put trust in the buyer's agent, knowing that like they didn't present me like an insane amount of deals, and
mate, 10 properties. That's all right.
I think it might have been around that. It might have been a little bit less, but they did present me. There was one time it was pretty quiet, and I just knew that there probably wasn't much stock on offer at that time. And for what I was looking for, they were selling fast. And I just, there's a reason I hired a buyer's agent is because I don't know as much as they do, which means at the end of the day, when I get emotional, I need to put my trust in them. And that's super important to remember at the end of the deal, or when you're signing papers and you're saying yes to, your letter of offer and all that sort of stuff, is to work with them and trust them. And yeah, we'll see how this pans out in a year's time. I believe that we'll be able to secure a good new lease, and that will increase the value of the property, and make it yield better as well. And we'll just track along and see how it goes.
You're on a variable interest rate with this one?
Yeah.
Yeah, nice. Cash rate's looking like it's going to drop, 50 to 100 basis points over the next 12 months. So
yeah, perfect.
That'll make all our lives a lot easier. And the trends there on international markets, UK and America. So there's my little flex of macroeconomics, people. And then renting. I had a client that I was like, what's your biggest fear? And they're like, just cash flow. My fear is that we're going to be in negative cash flow for a number of years. So it's like, that's cool. It's a pretty normal fear. And when you explain it and what's happening and you have like conviction, and it's just like, it's not just me, you can see this data and this information. It helps you to make these better decisions. And it's a journey, mate. But you got there. Well, you've still got settlement. Pre-settlement needs to be done. So we can, reassess from there. But maybe we can talk about what's next in the commercial property journey or the property journey. But for now, like, you got a really good base. You got, some really good residential investments that, really strong growth opportunities that you've got. Now you've got a really strong income play that is also a growth opportunity. I think it's like, you don't want to push it too hard and, lose it all, essentially, but you just increase your LVRs, get your comfort level again, and then go again.
Yeah. I think it's just time now, having that time in the market, with those few properties, and then eventually in a couple of years work out what my opportunity cost is with those properties, and restructure the portfolio, maybe buy something bigger. I think that's what I'll probably do. Sell a few things and just slowly increase the size of acquisition.
Well, the biggest thing that you're going to run into, and this is good for people to understand, is it gets boring from here on out. Like, so you can't, like, for me at the moment, like, I got my portfolio, got my kids, I've got business. Like, there's the investing side of things. I love it. That's why I'm in this space, right? So I get to do it every day. I get to help people, and it's rewarding. But there's always in the back of my head, as you know, where it's like, what else can I do? Like, how can I amplify this? And I'm running around in my head with, we could go to this project, and then what you need to do is assess it against like the opportunity cost of it all. And it's like, well, yeah, sure, you can go and buy something and make a quick $100,000, or you just stay the course and you get that $100,000 capital growth over a 2-year period instead of a 1-year period, and you don't actually have to do any work for it. So your hourly rate is phenomenal compared to it. And that's what it's like. It does get boring, but you've got the foundations really like perfect. So it's just grow upon that and reassess it every year, and focus on your business and your health and your relationships.
Awesome. Sage advice. Thanks, Sam. Thanks for the support going through this.
Appreciate it. Any questions for Jaryd on his journey, or in general? Obviously, drop a comment below. And if you're liking what you're hearing, definitely give us a review and on whatever platform you're on, because it definitely helps us grow. Hopefully by now you can understand that we're just here to help others, and I think that's a really good message to leave in this world when we're both surfing when we're 80 years old on the Mals. At least we know we gave back to humanity in a way that we wish we had. So
absolutely. Thanks, Sam, and thanks everybody for listening.